Welcome again, guys, to Proving the Market. This is Kojak's Pro, and I'm here to show you guys exactly what's happening in the market. This is Friday. We're almost at the end of this trading week, and a lot of our Forex insights have played out. It doesn't get any better than this because all I do here is to come on here and show you what the market wants to do, show you the things you should watch out for, the pros and cons this market throws out to traders that are anticipating trading opportunities, and know how to use that information the market is giving you to be able to position your trades and make profits from this market. I don't hide words when I come to this channel and say, this is what the market wants to do. Wait for this to happen. Once this happens, this is where we're going, and you position your trades in that direction. I make trading opportunities simple here, and that's what I'll be showing you in this trading video. And I'm kind of pumped up. I'm kind of excited because most of what I told you guys last week about Euro USD, GBP USD have all played out. I told you guys to be very cautious on trading these currency pairs because though they are complementary, there is an issue with their levels, and all was stemming from the information we're getting from DXY. And I'll show you exactly how that played out nicely with what I said and how to position yourself for better trading opportunities in the week to come. Now, we'll be saying that in this section of the video, and we'll be talking about more currency pairs. Without wasting so much time, let's get into the chart. Now, this is Euro USD. So you can see clearly that we have blown up all the way to the upside. Now, what occasioned this move? I'll simply go to the 4-hour time frame. I told you guys that all I was needing for Euro USD to do is to break above this zone, retest, and move up to the upside. Now we broke above, and you can see the retest didn't get to this zone actually, but you can see that Euro USD eventual target has been hit. And why this has happened is because Euro USD is overall bullish. Now we are overall bullish on Euro USD. This also stems from the fact that the bullish bias is all coming from the higher time frames. I told you originally Euro USD is bullish, and why I was considering a bearish trade was because we were creating this double top chart pattern on the weekly time frame. And I did mention in my last video that I'm having issues with the neckline because a chart pattern is supposed to hold once you're broken below it. When you begin to see that we break below a chart pattern and we keep on consistently violating it. So in this session, we broke below it, we retested, we broke back above it, we broke below it again, we came back above it. That's when you know that there is an issue with the chart pattern. And I say that if this continues and we do sustain above this neckline, it just means in hindsight that this is a failed double top. And in this case, when it fails, when the chart pattern fails, it goes back in the direction of the original trend. Now, the original trend for Euro USD is bullish, and you can see clearly that this market has shot back to the upside. And this move was preempted from the information we got on the DXY. So quickly, we go to DXY. We can see that the move to the upside on Euro USD was clearly spelled out by DXY. I came here last week and told you that DXY had created a double bottom here. It's also come to an iconic point on the market, which is this area inscribed. This area inscribed in yellow, and I told you that this area signifies the confluence point between the overall trend line, the chart patterns move, which is this double bottom you've seen here, and also the third touch of the trend line. So this is the third touch of the trend line. This is the trend line point as well. If we do not obey this third touch and we break below this trend line, so I will go over to the monthly time frame so you can see that this trend line is what's been holding the DXY to the upside. So this is the first touch, second touch, and the third touch. Now you can see that the third touch now evidently is not being respected, and it's also a confluence point. So if we did break above this and we met a weekly zone in green right about here, and I was like, if this is going to be a retest, so this is a break above a retest, and we keep on seeing more moves to the upside, that means that DXY moved to the upside. And if DXY did move to the upside, that means Euro USD, GBP USD, AUD will also tank to the downside. But I just showed you previously what has happened on Euro USD, and you have seen that Euro USD move to the upside has been occasioned by a break below the neckline of this double bottom. So we're not only breaking the neckline of the double bottom, we're also breaking this entire trend line. Now, if this, so this is the weekly time frame, if this market ends, because this Friday, if this week ends with this break below this, which is what it's likely doing, just be sure that we are now looking for a different type of positioning for DXY to the downside. So if this is going to hold, that means we'll be moving all the way back down to this point. You know what that means for the dollar index? It means that Euro USD, GBP USD, all of them will all move to the upside. The overall trend for Euro USD is bullish. The overall trend for GBP USD is bullish. It just means the market is realigning itself to its overall bias. And that's fine for us because as traders, we love trading markets. We follow the trend to get to our overall destination. So this is what is happening on DXY. The break below this neckline is signifying a move to the downside for DXY and a concomitant move to the upside for the dollar-based pairs. So I've just showed you for Euro USD. Let's see GBP USD. So on GBP USD, I told you guys that I will not be taking trades. I will not be looking for sell entry opportunities here. Why? Because GBP USD changed pattern here. So this move to the downside showed a change of character and price started moving to the upside. We just simply created a higher low, higher than this one. And I knew that I will not be looking for any sell entry opportunities here until we do come and break below here. But you can see the market is breaking well above. It's actually cleared this daily zone in yellow right about here. So I'll be waiting for GBP USD is for more push to the upside and then wait for a trading opportunity. Now, if GBP USD continues with this bullish sentiment, we're heading next back to this top right about here. So that's about 1.36929 and all the way to the upside right about here to the monthly zone. Simple. That's it on GBP USD. And we are all going to position this trade. These trades are likely going to be our starting point for next year, including our trading opportunities for Euro USD as well. So Euro USD, we have gotten to a monthly level right about here. So when we do break above this monthly level and have a retest of it, we're going to take, that will be a whole new set of move for Euro USD to the upside. And best believe that this is going to be the kind of trades that we'll be taking next year. We have profited a lot from our trades this year and we're already positioning ourselves for next year. I mean, it doesn't get any easier than that. This is how to trade and this is how I love to trade. And this is what we'll be looking at for Euro USD in the coming year. As simple as that. GBP USD is going to play out the same way and we'll break above here to come all the way here and we'll take our trades continuously to the upside. Now gold. Now this is what is happening on gold as well. I mean, we are just getting our trading set up correctly. You can see the last simulation I made is still here. And I told you guys that because this is where the market was at the time. So the market was somewhere out there. I said, I need a break above this zone and a test of it. Now you can see clearly that gold is doing just that. We have broken above with this huge 4-hour candle break above. Now, where are we heading next for gold? Gold's next target. So gold's next target is here to that green bar, which was the last supply region here. So we are heading here next for gold. And that's our next take on gold. How are we going to line up for these trades? We're going to simply wait for our setup and bot into these trades because it doesn't get any easier than that. When you follow this trading methodology and take these entries as they come, when your setup is being triggered, you get into this trade and make money. That's it for gold. Now the next pair we'll be looking at is BTC. BTC is lining up nicely. Like I told you that I have a setup ready for BTC, and I did mention in my last video that BTC is likely to give us this setup sometime around the 20th of December. I'm not a magician. I understand the way the market moves sometimes. I might be wrong. My setup might trigger before that. My setup might trigger after that. Or it might be invalidated, but all the same, we're waiting for a setup clearly on BTC. Now, all I'll be needing is for this trend line to be taken off. Once I break this trade, then I'll be looking for trading opportunities to the downside. And this is how I position likely for this trade. So how do I know this? It's because we've clearly had a resistance zone right about here. The market has broken below it, and we don't take trades on break. We wait for a retest. So we are retesting this zone nicely. So price has shot back to this zone right about here, and it's now begun to play around this zone. Why has price reacted around this zone twice like so? It's because we know what this zone is. We broke out clearly from this zone and we are all expecting a retest of this zone. Now once we do break this kind of trend line, we are going to be seeing BTC roll all the way down to $80,000 per coin, like I've predicted before, and eventually to $76,000 per coin. That's our take on BTC. This trading setup is going to be juicy to take, and I'll be waiting to hop on this trade. So that's it on Bitcoin, and I'll be waiting for our setups to be triggered on Bitcoin. The next pair we're looking at is oil. Now, I came here last week and I told you guys something. Oil was beginning to retrace back to this level, and I told you that oil created an inverse head and shoulder here, and this is likely the neckline. If oil holds here and this trend line is taking off, as at the time the market was just before the break of the trend line, I said if this market breaks this trend line, oil is going to roll over. Then show us what we want to do. Ideally, the way I want to set up for this oil, since it's behaving exactly like this, ideally the way I want to set up for oil is to just draw this right about here and then see how oil reacts around this setup. Now if we do get a fine break, then I'll be looking at more sell trades for oil to the downside. And if that happens, my next target, my first take profit for oil will be $57 per barrel, which is going to be here. And then the overall target will be 55 as I predicted earlier on. So that's it on oil quickly. Has oil done that? Exactly. And some traders were able to take off this to make profits of this trade. I wasn't even following oil because I was concentrated on other trading opportunities. I wasn't even looking at oil. And traders took advantage of this. After the break of the oil, they jumped in clearly and they have taken their first take profit at the 100% retracement, which is right about here. This was just an easy trade to take, and it didn't take. So this was triggered sometime on Monday. So this trading setup was actually triggered on Monday, and he take profit on Friday. I mean, I come here and I just say something. I just knew that if this market breaks this, we're going to roll over to the downside. This is how trading is, and it's not magic. It's just understanding price action for what it truly is, and then following the market cleanly. Some traders took this trade and were happy about it, and I was happy as well because people are now understanding that this is how the market moves. Take the trading opportunities as they come. See the market clearly. Even if you just take, I remember saying this categorically, even if you just take my trading insights and face value, just make sure you're following what I'm saying, you make your profits. Was it hard to take this trade? It wasn't. Okay, probably it might have been hard because most traders don't understand this setup. But if you just take my word for it and then go and apply it in your trades, you begin to see clarity, because I love to see clarity. So even traders that have enrolled into my course are beginning to appreciate how this trading system works and how I trade. See the market clearly and make money for yourself. It's how trading is supposed to be. It shouldn't be hard, just that a lot of traders make it hard. So oil has hit its take profit here. I didn't take this trade, but kudos to those traders that took it. Now, how we position for oil? So since we have gotten here, so here now becomes the 100% retracement. Just wait for a break below this trade and continue to push oil down to the downside. Remember our original target for oil. So I'll go back to the daily time frame now. Remember, our original target for oil is $55 per barrel. Now we've gotten here to 100% retracement. This market is likely to continue rolling to the downside, and hopefully I'll be looking for more trading opportunities here. And that's it on oil. Now you can see that these trading setups are aligning, and traders are already beginning to take advantage of them by just watching my YouTube video, and also those who have enrolled into my course are already positioning themselves to take all these trading opportunities next year. I'm not going to leave you guys because I'll be here. I'll come here and make more videos to show you exactly what the market is doing, so you can see the kind of trading opportunities I'm looking at, and then position yourself to take them and make the same kind of profits we've made this year. Probably will make even better next year. So it's all about getting hang of the whole thing, of this whole price action thing, how to read price action cleanly. Now, if you want to do that and take advantage like other traders are doing, I'll still say this here, the price action quick start, which is my program, is going to help you do that. It's going to help you cut out the fluff, see the market for what it truly is. Remove confusion from you as a trader, make you see the market clearly, make you understand naked price action, so that when you've seen the market and understood what the market's about to do, you follow the market in that direction. When you hear that, you make more money when you place the odds of the market in your favor. That's simply what I say here, and that's simply what I do here. I teach it on the Forex program, which is the price action quick start. It's right at the link of this video. Go and take advantage of it and join other traders to position themselves for better trading opportunities next year. And we'll make the money. Just as I'm making money, you guys can be making money as well. The momentum in the forex market is already beginning to die out this year. Sometime around maybe the 21st, 22nd, the momentum will be at its lowest, and you don't want to be taking trading opportunities at that time. That's why I'm saying we should be focused on next year. And when we focus on next year, we have more trading opportunities. Probably this year must have been very rare for you. It happens like that for traders, especially when you don't know what you're doing in the market. When you're just guessing your way through, it happens like that. Every trader starts somewhere and begins to level up from there. That somewhere might be your lowest point after blowing series of accounts. you've tried series of strategies and none of them seems to be working, you're not asking yourself whether there is actually a leeway in this market. Obviously, there's a leeway, but you need to understand that this market has a particular way which is supposed to be traded, which institutional traders use, which those that focus clearly on price action use, which the Kojak Pro Trading Academy uses. So get yourself prepared, equip yourself for 2026 trading opportunities, and get the program. The link of it is right at the description of this video. Go and join it now and start trading better. Now that's it on oil. The next trade we'll be looking at is GBP/JPY. Now GBP/JPY, you can see after our trading opportunity which we took, we still have our profits running. We've been locking in profits. I told you guys that a break above and retest. So this is like I think this is a supply zone. So just go to a weekly time frame. So yep. This green bar right about here is a supply zone, and the market got to that supply zone. I told you guys that I'll be really waiting for the market to hold above this zone. So I'm just going to line this zone out nicely with a weekly level. So this is my weekly level. I'm lining that zone out nicely now. This is a weekly level because this was the last supply zone. If the market holds above this zone, GBP/JPY will continue to move to the upside like so, and we'll be heading next to the next monthly zone at 212.418. Now if we do break back below this zone, I will not be looking for any trading opportunities for GBP/JPY. Why? Because we have met this weekly resistance zone, because the market can just come to this region and start reacting around here, and then it will now look like in hindsight that this might begin to be a double top. So I will not take any trading opportunities until we clearly sustain above that zone. Now we've locked in all our profits we made here from our trade. So this was our trade. If you go and watch our previous video, we had the trading opportunity somewhere around here, and we've lined up nicely. So this is how we've lined up for this trade. Actually, the overall risk when I said is this big, and we've locked in profits here, and we broke above this weekly zone. We've still locked in more and more profits. I'll be waiting to add more positions right about here, but the market needs to give us a favorable trading opportunity, and we'll get into this trade. If you want to know how I'll get into all these trades, it's all in the PAC program, which is a price action quick start program. In that program, I'll show you how to position yourself for these entries, the rules of engagement, and what triggers these setups, and how to get in accurately. Go and grab the course if you want to know exactly how I get into this trade, and we'll go on from there. So the next pair we'll be talking about is GBP/NZD. GBP/NZD, is it really giving us a trading opportunity? It's not giving us a setup, but it's moving in line with what I said. I told you guys that this market is likely to roll over to the downside. However, I'm not going to be taking trading opportunities here. I'll only be looking for more trading opportunities when we break below this zone right here. And this zone kind of coincides with the overall trend line. So when we break this trend line and likely sustain below it, and then this zone here, I'll be looking for more trading opportunities to the downside on GBP/NZD. GBP/NZD is overall bullish, but we are having issues at this level. The market came here, which was the last supply point, came here and chose not to break above it, swept out traders because this was an external liquidity area. I showed you guys, I talked about it in my last video. This area right about here was an external liquidity area, and it's taking out a lot of traders that don't have setups to use to get into this trade accurately. And we've rolled over to the downside. GBP/NZD will not be seeing any more of my trades until our criteria is fulfilled, and that's when we break this standard trend line right about here. And that's it on GBP/NZD. USD/CHF is not even trying to play ball with us. This is a clear-cut scenario of what a ranging market looks like, or a consolidating market. This is a sideways market. What should you as a trader be doing in a sideways market? Nothing, absolutely nothing. You're going to have all your trades trashed out. The thing is that, you see this market right about here. You see this market right over here. This is a range. Any strategy that you're using to trade this range will break. If you don't know what you're doing, stay off from this type of markets. USD/CHF is in a clear-cut range. Stay off of it. And if you want to keep on forcing trades here, be ready to keep on funding your accounts. As simple as that. Be ready to keep on funding your account if you want to keep on forcing trades on USD/CHF. All we need is clarity, guys. We need a break above this. We have anticipated this for the longest time, but it's not just playing ball with us. It came after we took some trades to the downside here. It came here, it came back here, held, broke above it, came back below it, came here, retested it, came back below it. Now it hit here again, and it still rolled back to the downside. I mean, it just shows that it's not ready. Once we eventually have a break here, this market is going to shoot up to the upside. And we'll be waiting for that to happen. For now, it's not playing ball with us and it's not giving us any trading opportunities, and we'll just leave it alone. NZD USD is not the most favorable pair to trade now. I mean, we broke back below this. This was supposed to be a failed chart pattern and we rolled back below. We did get some profits to the downside, close to this. Actually, the market did get close to this, but it didn't hit the monthly zone. And we've come back to trade above that neckline, above that region right about here. And in doing so, the internal trend line is about being approached. Now, I'm going to be serious about this because we've now created, so this is the weekly time frame, because we have now created something that looks like a higher low from this one. So we have this low right about here. Because we are creating something that looks like a higher low from this one, this market might likely want to roll over to the upside. Now, the only way I will wait for a cool trading opportunity for NZD-USD henceforth, simple, clear price action. If the market does break this counter trend line and breaks this zone right about here, retests this zone, then we'll take NZD-USD to the next zone right about here. So this is our position for NZD-USD in the coming weeks, because definitely this is not going to happen anytime soon, and NZD-USD is used to consolidating for quite a bit before shooting out of the bottom. But when it does happen, I'll update you guys on NZD-USD. Now, the last pair we'll be talking about, which is juicy, is actually CAD-JPY. Now, this pair interests me. By the way, I've made an update on the program and I've put more insights about positioning yourself for trading opportunities, taking better entries on these pairs. I've added it to the course because I said I'm going to be adding more and more insights and update to the course for the students in the course. So I've made an update on that, and you're going to see it in your entry section. It will be added shortly to the entry section so that you understand how to use the entry formula I showed you guys to be able to take advantage of this market to the upside. Now, for everyone here, if you were able to watch my free Forex Masterclass, I come on here most of the time to talk about it and to show you that the best way to actually trade this market is to follow the insights, the intrigues I showed you, the nuggets I showed you from that video, and follow it all the way, apply it to your trades, and then begin to see your trading clarity transform and start making more money from this market. Because why? You're just simply following what the market is doing. Anyone that follows the market puts the odds of profitability in their favor. And this pair is no different from most other pairs I talk about. Now, in that video, I did show something. In the masterclass, I did point out that this entire area was a Fibonacci area, and the market sustained above it and began to move to the upside. And we're somewhere around here, and we traded this pair after it happened. Just after the masterclass, our trading setup was triggered. We were able to take these trades, and you can see that the market has moved from there all the way to this side. Because at the end of the masterclass, I told you that CAD-JPY is bullish and we are going to see more trading opportunities. And if you're a trader that love to test things out, you would have clearly seen this and taken the trading opportunity as it came. But obviously, most traders will know the direction but not know how to get in properly. But if you follow the way I trade on this YouTube channel, you will see that you would have been positioning your trades to the upside. Just take your trades up to the upside. Just like I talked about the oil pair, and I just told you guys that if there was a break of that counter trend line, that oil is going to tank further. Traders took that trading opportunity and made money for themselves like that. So that's what I said at the end of the masterclass, that we're going to be seeing CAD-JPY to the upside, and we had some opportunities that rolled that took us all the way here. We took our trading opportunities nicely and locked in profits. Now the market has moved halfway for this original move, because all the move to the upside was, so we had the trading scenario like this, and we're anticipating all the move right about here. We're anticipating all this move to the upside, and you can see that we have clearly smashed more than half the distance. This is not the exact trading opportunity, but this is what the simulation looked like. It's actually more than this. So this is what we look like so far on this trade. So this is going to give, this is giving us a risk of 1.8, but the overall, so we'll take another profit right about here, because here's a supply region, and the overall take profit will be on the monthly zone. So this is a trading opportunity of 1:12. So this my strategy enables you to risk small and then earn a lot of money from the market, because you are following the market's direction. And you can see that we've clearly gone a lot of distance and we've locked in profit. Best believe that we've locked in profits and moved more stop loss to break even, and then we have even entered more trading opportunities and locked in more profits here. That's how we'll be taking this trade all the way to this point and then eventually to this point. Now, why is CAD doing this? Because we are overall bullish on CAD. So if we go over today, so just take this out now. If we go over to the monthly time frame, our analysis starts from the monthly time frame. You can see that we have a monthly trend right about here. The market broke this trend line, retested it, came back above the monthly zone, retested the monthly zone, and on the weekly time frame, in hindsight, this was a failed head and shoulder that wanted to see the market to the downside. And also, we now start pointing upwards. We broke above this monthly zone right about here, and then we're now seeing more trading opportunities outside. Now you've seen that we've clearly cleared this last high. So I'm just going to go to the daily time frame. So we've cleared this level right about here, and the market is pointing upwards. I'll be waiting for more trading opportunities here. Ideally, I want small pullbacks, and then we'll now take more trading opportunities to the upside. As simple as that. So most of these pairs will be looked at next year, and we will see what the market gives us from there. That's it on this forex trading insight for this week. So these are most of the trading opportunities that we're looking at, and we are positioning ourselves for more trading opportunities as they come. It doesn't get any easier than this, guys. So go to the link of this video, enroll in the course, and start digesting it and get yourself prepared for trading next year. If you've not subscribed to your channel, do so now, because I will still be coming here to give more insights on this market as things unfold and show you guys the best trading opportunities available in this market. That's my time here, and I will see you in my next video.